Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Community Health SYSTMS Inc. quarterly report. Community Health Systems, Inc. offers a wide range of healthcare services to the public. Some of these services include general acute care emergency room services, surgery, general and specialty, critical care, internal medicine, obstetrics, diagnostic services, psychiatric services, rehabilitation services, skilled nursing services, home care services, outpatient services, plus primary care practices, plus urgent care centers, plus freestanding emergency departments, plus ambulatory surgery centers, plus imaging and diagnostic centers, direct-to-consumer virtual health visits. The stock price of Community Health Systems, Inc. CYH, has remained relatively unchanged in the past year despite notable fluctuations. A 16.16% decrease over the last year and a 6.4% slip year-to-date as of August 2025 are significant movements, but they do not indicate a zero change. Analyst sentiment suggests that various factors have balanced each other out, leading to a perceived lack of significant positive or negative impact. Several news events from October 2024 to October 2025 demonstrate this balance. The company's Q3 2025 financial results showed improved net income, but analysts rated CYH as neutral due to mixed performance and valuation challenges. A tightened 2025 EBITDA outlook led to a cautious tone among analysts, while the CONE 2025 results showed a mix of positives and challenges. The release of the 2025 Community Impact Report highlighted the company's economic contributions, but did not cause an immediate stock price movement. These events suggest that investor concerns over labor costs, declining commercial surgical procedures, and other factors have offset each other, resulting in no significant changes to the stock price. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by an increase in charity care services due to updated policy, divestiture of 4 hospitals resulting in a net gain, and higher reimbursement rates. Additionally, same-store basis net operating revenues increased due to higher supplemental reimbursement program revenue and favorable changes in payer mix. On the other hand, revenue decline can be attributed to decreases in consolidated inpatient admissions and charity care services as a percentage of net operating revenues. Furthermore, direct and indirect costs incurred in providing charity care services have also increased as a percentage of net operating revenues. Net income and profit margins. A turning point for the company's financial performance has undergone a significant transformation, marked by a substantial improvement in both net income and profit margins. In 2024, the company incurred a loss of $334 million, but this turned into a gain of $516 million in 2025, representing an increase of $850 million. This turnaround is also reflected in the company's profit margins, which improved significantly from -11.7% in 2024 to 5.6% in 2025. The improvement in net income as a percentage of net operating revenues further supports this trend, increasing from -3.6% to 5.5%. The decrease in operating expenses is likely a contributing factor to the increase in profit margins. The quarterly and year-to-date results for 2025 also demonstrate the company's improved financial performance, with net income increasing by $521 million for Q3 2025 and $845 million for YTD 2025, compared to the same periods in 2024. Overall, these changes indicate a significant shift towards profitability, marking a turning point for the company. The company is generating positive operating cash flow, indicating a healthy financial position. The data shows that the net cash provided by operating activities has increased from $264 million in 2024 to $277 million in 2025, a rise of $13 million. This increase suggests that the company's operations are becoming more efficient and profitable, allowing it to generate more cash from its core business activities. The company's debt level and interest expenses have undergone significant fluctuations over the past year. On one hand, long-term debt decreased from $11,432 million to $10,589 million on page 3, but increased significantly from $12.8 billion in 2024 to $13.3 billion in 2025 on page 14. Total debt also increased from $10,000 $11,605 to $11,452 on page 16. However, the debt level decreased due to redemption of senior unsecured notes and issuance of new senior secured notes on page 17. Additionally, debt level increased from $6,939 million to $7,577 million on page 19. Regarding interest expenses, there are mixed signals as well. Interest expense net remained consistent at $216 million for both periods on page 1, but cash paid for interest was higher in 2025, $622 million, compared to 2024, $562 million on page 45. Overall, the company's debt level and interest expenses have experienced significant changes, making it difficult to determine a clear trend. Management's outlook on company strategy. The company is considering divesting non-core businesses to optimize its performance. However, this move will be contingent on what management deems best for the company's interests. Additionally, management expects a decline in revenue starting from 2026 due to changes in healthcare policies and reduced reimbursement rates. Despite these challenges, management remains confident that the company's current cash reserves and borrowing capacity will suffice to meet its financial needs for at least the next 12 months. Furthermore, management is prepared to take on debt strategically if needed. The company has made several significant acquisitions and divestitures over the past year. Key acquisitions include Northwest Health Stark, acquired on March 1, 2016 physician practices and clinics, valued at approximately $1 million each for the 9-month periods ended September 30, 2025 and 2024, goodwill of $3.5 billion recorded in 2025. On the other hand, notable divestitures include sale of businesses resulting in a net gain/loss of $242 million in 2025, divestiture of hospitals, amounts not specified, in 2025 and 2024, gain on hospital sale in 2024. $17 million cash paid for taxes related to gains on hospital sales in 2025, $52 million and $126 million. The company's financial summary reveals two key points regarding its capital distribution strategy. Firstly, it has not paid dividends to its shareholders, with no information provided on this matter in the relevant section of the report. Secondly, there is no evidence to suggest that the company has bought back shares, as both page 8 and page 59 confirm that no share buyback programs have been publicly announced or implemented. That concludes the financial summary for Community Health SYSTMS Inc. Feel free to comment below, and I will be happy to answer them when possible.